Welcome to today's episode of Peak Market Watch. We speak with market leaders in commercial real estate and related services and who have a close pulse on the current market environment. My name is Anton Mattli, co-founder and CEO of Peak Financing. Today, I'm honored to welcome Ben Suttles, managing partner of Disrupt Equity. Welcome, Ben.
Hey, Anton, thanks for having me on. Look forward to adding some value today on Peak Market Watch.
Yeah, definitely. Ben, why don't you introduce yourself to our guests?
Yep. As everybody said it there, as you said in the intro, Ben Suttles, managing partner, Disrupt Equity. We're based in Houston, Texas. Bought and sold over 5,000 units in Texas and Georgia. Our main markets are Texas, Georgia, and Florida. We also have some opportunities there. But in essence, what we do is we buy, we manage, and we develop multifamily. So 2024 is going to be an interesting year. Just came out of NMHC where I saw Anton, and we're going to see what the market has in store. But I think there's going to be some opportunities.
Yeah, definitely. You mentioned NMHC.
Mm-hmm.
Last year was only much more of a somber mood.
Yeah.
This year, it sounds like everyone is a little bit more positive, looking forward into 2024. On your end, how would you describe the last year for Disrupt Equity?
I think, it's a year of change, I would say, right? I think in a lot of ways, people are having to evolve, right? And evolve in what they acquire, how they raise money, how do they manage the assets? I think everything has just changed. The decade of market appreciation is behind us. Now this is the decade of the operator, the people that are buying right, capitalizing the deals correctly, managing them closely, and have plenty of reserves. And so, I'd say 2023 was a lot of that. And I think 2024 is still going to be some of that. But, I think in a lot of ways, we've had about 2-year lull of this interest rate, expansion and, inflationary environment. And I think there's a lot of money out there. I think there's they're starting to uncover some opportunity. And I think that money is going to start getting put to work, and people are going to will some movement into the market. I think NMHC and the end of the year is going to be good, or the second half of 2024. Much demand and there's so much money sitting on the sidelines, and that we're just kind of waiting for things to kind of pop a little bit, right? And I think everybody's kind of consensus is the people that are going to really need to sell, or that's going to start happening over the summer. And so, we've been kind of dialing in our operations. We've been dialing in how we underwrite deals. We're dialing in the management side and the operations to be as kind of nimble and flexible and and customizable as we can as a property management firm, because we're vertically integrated. And we manage other people's deals. We don't just manage our own first party deals. We also manage third party deals. So we also have an insight into how other people's deals are capitalized and how they're doing. And that's allowed us to kind of learn from the good, the bad, and the ugly on what they've done too. And, 2023 was an interesting time. I think in a lot of ways, it was a lot of wait and see too. And I think people are tired of waiting and seeing. And so, again, a lot of ways, we're just going to will this thing into existence. And, that might not be a bad thing. I think, again, you're starting to see cap rates that are a little bit more in line with where they should be. Maybe not as far as expanded as people would like, but certainly a lot better opportunities than we saw in 21 and 22.
Yeah, that's definitely the case. We see that with permanent financing, with buyers going straight into agency financing, where they now are able again to get 70 to 75% LTV, despite the much higher interest rates, right? Where we talk about 5.5% to 6% all-in rate. So certainly there are some deals that are coming to the market where the price expectations by the seller certainly has adapted to the new rate environment.
Mm-hmm.
Right.
Yeah, you're seeing some stuff that's 5.5 to 6. So it's not a huge amount of positive leverage, but it's certainly better than negative leverage, which is what we saw for 2 or 3 years.
Yes, absolutely.
And so and this too, but just for your listeners, like that, what that shows me is that things are kind of coming into an equilibrium, and that's not necessarily a bad thing.
Yeah, definitely.
Mm.
Yeah, we certainly have seen a perfect storm, right? From mid 2022 to all the way through now, with particularly last year, with where we got hit by the record interest rate
Yeah.
increases from a speed perspective, uh, as well as insurance going through the roof in many markets,
Yeah.
obviously in all the coastal markets,
Mhm.
as well as property taxes picking up based on the massive price increases that all the assessors have seen during 2021.
Yep.
So it definitely hit everyone from all sides, and the inflationary pressure had also an impact on payroll, which then had an impact not only on the payroll itself, but on contract services and repair and maintenance and everything. So
I mean, I think inflation has hit every part of the market, and insurance has also been a double whammy. I think that there's some inflationary pressure there, but I think in a lot of ways it's the the carriers, the insurance carriers, that is, just haven't made any money for a long time, and they're using this as an excuse to make their money. They are a for-profit business and industry, so I don't blame them, but it's at the detriment of a lot of people because some of these jumps that we're seeing are, upwards of 100%, 200%, in some markets, and that's very tough. That's very
yes,
challenging on top
yeah,
of everything else that's happening too.
yes. So with that, obviously, operational efficiency is extremely important. So you guys are vertically integrated. You have your own property management company, as you have mentioned.
Mhm.
Uh, where would you say is that beneficial compared to just hiring a third-party property management company?
So we started Emerge Living, which is our property management arm. End of 2019. Some would say that's a bad time right before COVID to start our management company, but there was a little bit of trial by fire, and I feel better that we did it then, because if we were to have a third party property management company manage some of our assets during COVID, I think it would have been devastating. But it's a lot of work, but very, very rewarding in the fact that when challenges in the market kind of present themselves, we can be that nimble, quick to react, quick to pivot and change direction as far as how do we manage these assets. And I think that that's important. And I think that's going to be something that's going to be important over the next 5 to 10 years too, right? Because I think the market is evolving, it's changing. I don't think, maybe they'll do some interest rate cuts, but I think that there's still a lot of turbulence in the market, and I think that's going to continue. And so it's been good. And I think, ultimately the other thing that I'd say is a big boost or big benefit of having your own management company is not only that nimbleness and that being able to quick to execute part of it, but it's the economies of scale that you get too. And then the third leg of that stool is really just, the insight into the market, right? When you do third party management, you see how other people buy deals and how they capitalize deals and how they manage their own or asset manage their own deals. And it's interesting. Everybody kind of, carves their cake a little bit differently. So does operators on our own stuff too, right? We learn from some those are those are three big boosts of having your own management company. And I think, as people that are looking to get into the space, obviously you need mass, you need enough units to justify the cash outlay that you're going to have to make to start a property management company. But as soon as you get there, you should really think about it, because if you think about the big operators in the market, every one of them almost exclusively has their own management company, right? Now there's some big guys that don't, and I get that for whatever weird reason, but most 9 operators out of 10 have their own management company, and you got to ask yourself, why is that?
Yeah, that's
Um,
an excellent point. I would
mhm.
say where it probably is okay, and where we see it a lot is in the true Class A space, where you are institutional buyer and you hire Greystar, whoever else it is, that
Yeah,
are experts in the Class A space, and there it's probably okay,
yeah,
right? to do it. But once you get into the B and C class space, it's extremely challenging when you do not have that connection between ownership, asset management, and property management.
Mhm.
And I think, based on what I know from you guys, as well as see it with some other owners that are vertically integrated, is that the employees on the property management side, they're also getting much more into the ownership mindset, right? Very
Mhm.
often they
Yeah.
have ownership interest with some form of share options or other benefits
Mhm.
that are driving that ownership mentality. And at the same time, also the people on the asset management side learn more about the property management side, what their challenges are, right?
Yeah.
So it's really turning into a integrated team that where everyone understands the pain points of the other side and attempts to resolve those pain points. Would you agree with that?
Absolutely. I think, you kind of hit it on the head where, we're all essentially somewhat owners of these. It's not like, oh, that's a third party. I mean, even though, and we treat our third party clients like they're our own deals, but it really is that sense on the first party side, because there is, we do, it's not necessarily profit sharing, but it's more so just, they can invest in our projects. We match whatever they put into the deals. And so some of our team members really are owners in the assets. And so they have a true skin in the game feeling of ownership of these deals. And I think, so, how would I manage this versus like, oh, that's somebody else's deal. And then I think property management for the longest time was kind of like that. It was just like, it's just some rich doctor and he's not going to care if I'm lazy on this or that. And, again, the market has shifted. We're looking at every penny. We're looking at every decision. And is this going to get us the best return on our investment? Is this the most efficient, profitable way to do things? And we dissect that stuff weekly. And I think that's important to have that buy-in of the property management team and the asset management team, right? The other piece of that puzzle too that we have is the construction piece. Because in a lot of ways, because we're doing a lot of workforce housing, a lot of class C and B stuff, we're putting anywhere from 5 to 10, 15,000 a door into these projects. And so these are millions of dollars. And so, we started stealth renovations a couple of years ago, but it was really in an effort, again, to streamline things, bank on economies of scale that we had, and again, tie all of these things together, to be a more efficient organization. And I think that's led to some profitability and again, quick to execute too. I think in a lot of ways, just like on the property management side, when it comes to renovations, when it comes to CapEx, sometimes, being quick to get things done and get out there. Hey, we got to go do this. We got to go do this project, and having a team that can go do it really, really quickly versus having to go get bids from a general contractor. And then he's got to mobilize and all these things have to happen. And then he's adding his 30 or 40%. We can be lean and mean and quick. And so I think that's another important aspect that we bring to the table, is all of those things kind of tied together. And again, you have to look at every penny, because you've got insurance that went up 100, 200%. You've got all this inflation. You talked about payroll. I mean, payroll's gone up 30 or 40% in the last couple of years. We all know about taxes and the challenges that everybody constantly has every year on taxes. And those are just 3 line item expenses. I mean, they're the major ones, but everything else has gone up too. Materials, flooring, all of these things are. And so it's that much more important to work with somebody that has these pieces together, because those projects are inevitably going to be more profitable.
Yeah.
And
Yeah.
so it's important.
Yeah, you mentioned a good point, right? Quick to react. Obviously, it's much easier when you're under the same group, right?
Mhm.
Where the communication is much faster, where you probably know each other now from different events that you have attended, whether it's training events or celebratory events, right? With
Mhm.
like or holiday event and all that, compared to with someone just being a third-party provider, whereas only the response time will never be the same.
It's going to be
And
different. Yeah.
it's different, right? And that's only particularly multifamily, where you constantly have unit turns as a nature of the business. It
Yep.
matters whether you turn a unit within 1 week or 2 weeks, right? That's real
Yep.
money that is essentially burned if the longer you take to turn these units.
Yep. Yep. And so, yeah, I mean, and that's, I mean, we're all under the one kind of office space too. So it's nice, I mean, even this morning, I walked and talked to the head of our construction, and then, 2 doors down is, one of the heads of our property management company. And so, yeah, I mean, they're right there talking and facilitating communication between the teams. And, there's not this rigid org chart, that we have to deal with too. And hopefully never we get to that. Who knows? I don't think we're ever going to be a gray star. Neither do I want to be. Right. But there's some good things in kind of being small enough to still care, but big enough to be able to push your weight around and get some economies of scale when you want to be. Yeah. And that's what we're striving to be at Disrupt.
Very good. So you mentioned you also do property management for third party, for
Yep.
other owners, right? As a true third party property management for them. What advice would you give to the owners when it comes to dealing with a third party property management company, right? So you have now experience with many of these owners, and particularly in the last 2 years, everyone has been faced with a lot of challenges, and it's not easy to deal with these challenges when you, as a third-party property management company, have to deal with an ownership that is not necessarily on top of the game. So, from all your experiences, what would you say are some of the major issues, and your advice and tips to owners how to work more efficiently and successfully with a property management company?
So, I mean, I've seen it from multiple sides. I mean, we used to use third party, and obviously now we are a third party property management company. And so, I see it from both sides of the lens. The one thing I always tell people is, we are not your asset managers. We are not your equity. We are not your lender. We are your property management company. There's only so much things that we can do. There's only so much flexibility that we can provide. And so, and just knowing that we're trying to be a good steward of your property, if there's a capital needs, I'm not your equity partner, right? And being able to recap the property or pay for various bills that need to be done, that's just a necessity in this business. And so we've gotten better with the clients that we work with versus in the past, and we underwrite everybody's deal because I want to make sure that whatever they think that they need to be hitting, the targets that they need to be hitting on their pro forma, we can actually hit. Right? We're not miracle workers. There's only so much we can do, especially given the environment that we're in, especially when properties don't have a whole lot of money. And so, I would say if you're a potential client that wants to work with Emerge, I mean, be prepared. We're probably going to underwrite your deal. We're probably going to ask tough questions. We're probably going to ask you how much reserves do you have? How much more CapEx dollars do you still have escrowed with the lender? What's your business plan, right? When's your exit? And then ultimately just knowing that, hey, we're running a business, and if payroll needs to be paid, our expectation is that funding is provided. And some people, it's tough out there, and I think we're sympathetic, but it's tough to put the management company in that position. And so, I'm hopeful that things can kind of ease up on certain people in certain submarkets, because I think it's tougher in certain areas than it is others. But right now that would be my suggestion. And I would say that knowing that, hey, work with, and even if it's not Emerge on our side, if it's somebody else, doesn't really matter. Work with somebody that you like, know, and trust, that, hey, you really are trying to kind of come in as a partnership. Hey, we're all wanting the best for the asset, for the property, for the business plan. And, and I think that's important is to work with people that you like, it's just not worth it on either side to be miserable all the time and be pointing fingers and be upset. So, and so that would probably be my suggestion for anybody that's looking to take on a third party property management company.
Yeah. Very good points. Unfortunately, right, when it comes to the priority for a asset owner to make payments, the debt service is always on
Yeah.
top, obviously, right, which is understandable. Uh, the problem is, as you've mentioned, when someone doesn't have the required cash flow and money, the debt service will always be on top of that list.
Yep.
And then very often there is not enough money left to pay the property management company, which in turn has to pay the staff on
Yep.
site to run the property, and cannot do all the required capex. Just even if there is no new capex that is technically needed just to maintain the property, and if one squeezes the property management company, one is really squeezing the lifeblood at the property, right?
Yeah.
And I think that's what a lot of owners, in my view, really misjudge. They think, well, we need to pay the lender no matter what, but we can delay the payment to the property management company. And for a brief period, that may work, right? But at some point, as you said, the property management company is not the equity investor, it's not the lender. They are not the owner of the property. They provide a service, yet it's the lifeblood of the property. So it's really extremely important to pay the property management company. And
It's a tough spot. I mean, I'm sympathetic, to some of the ownership group, but you bring up a good point. It's like, hey, these are real people. This is our staff. These are our employees, and us at a corporate level might be able to float some things, but really you're shooting yourself in the foot, right? Because if their payroll is going to be late, they're not going to be upset at us, right? They're going to be upset at the owner and the lack of funding that they're getting. And they're going to say, well, do I really want to work on a property that doesn't have any money and they can't even pay my payroll? It's like any other business, right? If you can't pay your payroll for your employees, how motivated do you think they're going to be? Especially when things are even more challenging on top of that too, right? And so, and you're right. The one thing that you pointed out because we've run into this last couple of years is everybody wants to prioritize the debt service, but that's not really our obligation. That's your obligation. Our obligation is to pay the bills of the property, pay the payroll. We have obviously our management fee, utilities that need to be provided to our tenants and to the residents of the community. And those are just as important in our book. The only person that's obligated to pay the note is you, as the owner. And so, and I think that gets lost sometimes. And so we've had to toe a fine line, but again, the benefits of having that third party business, and being able to help some of our friends. I mean, we've been able to turn deals around and people have been able to sell them for a lot of profit. That's so rewarding to us. And so, I'll take a couple challenging years to be able to have those memories too, that there is good things that are happening and there's the good things that we can still do in this business too.
Sure, right. So that's only appreciated, right? You mentioned if you want to take a brief cut at the corporate level, right? If you say, look, yes, we are accepting that we may delay the management fee or whatever for a brief period, that is fine, right? So it's still not the right thing for you as a third-party provider, but at least you work with the asset owner to get through a hard time. But when it comes to the employees, there cannot be any level of tolerance, right?
That's just not, it's not fair to anybody. It's certainly not fair to your manager and the leasing person and the maintenance staff that's just busting their butt out at your property. And then you want us to turn around and tell them, sorry guys, we don't have any money to pay you because the ownership group didn't fund. That's the optics of that don't look good for the ownership group. And so
that's exactly right. Right. Yeah, so you can imagine if you don't pay pilots at an airline, how long can will they fly, right?
Yeah. Or any business, really. I mean, let's just be
Or any
honest. I mean, nobody's going
business.
to work for free.
Yeah,
I mean, it's just, especially in property management, it's a tough business.
yeah,
It's not a walk in the park. It's challenges every single day. And so, and a lot of those folks they're living paycheck to paycheck. And so we want to take care of them. And so that's
yeah,
important. That's a good point to make, to listeners is like, hey, we're not trying to be mean about it. It's just, this is people's livelihoods,
sure,
and owners need
absolutely.
to take that seriously.
Yeah, definitely. Uh, so switching gears quickly before we sign off, really appreciate you coming on, Ben. You also have been organizing a multifamily event
Mhm.
started out in Houston, and you have had it in various places across the country, from the West Coast to the East Coast.
Yep.
But the next one is in your
It's in,
hometown in
yep.
Houston.
It's in
Uh,
Houston. This is our big event just because it's in our backyard. So it's going to be February 17th. So it's coming up in about a week and a half from this recording here. And we're excited to have it. We're probably going to have I'd say 400 or 500 investors out there. All the great vendors that we work with. Peak Financing is going to be out there, so we're really excited to be partnering with Anton and his team again. And there's going to be a lot of great panels, a lot of great speakers. It's a one-day event, no sales pitch. We're not selling anything. There's no coaching program in the back that you got to whip your credit card out on. We just wanted to create a space and an ecosystem that kind of gave back to the community, educated people, provided a platform for us to learn from some great people in the industry. And, I think this is going to be our 13th one. So, it's really, really exciting to kind of roll another one out. And then the next one will be in Denver in early June. So check it out, mfinvestornetwork.com. You can put in, I think we've got a coupon code. There's always a coupon code. So put in
yeah.
disrupt. You'll definitely get some money off, if you wanted to buy a ticket. But that's coming up in a week from this Saturday, February 17th.
Yeah,
Yeah.
great to hear. Uh, I like these events where you don't have any coaching gurus asking to go to the back of the room to sign up for more coaching.
Yeah.
Uh, so it's really obviously an event where you hear from various speakers about the state of the market, and very often some very good nuggets from the stage. But at the same time, it's also an opportunity to network with other deal sponsors and investors. And I would say in the current environment, it's probably more important than ever that investors as well as deal sponsors network with each other
Yep.
to learn from each other, and also realize, yes, we have gone through a pretty rough period and we are not out of it yet, but these periods also provide a lot of opportunities, right? And people who are involved and learn from each other will be able to take advantage of those opportunities. And I think an event like this is definitely helpful to achieve that.
Absolutely.
Yeah. So thanks again, Ben, for coming on. So how can our listeners reach you?
Yeah, no, I appreciate it, Anton. Had a lot of fun. You can check us out. www.disruptequity.com is our website. We've got a lot of great content on there. And then we're on all the social media channels, Facebook, LinkedIn, Instagram. We put out YouTube. We put out a lot of free content, so check us out there, and look forward to connecting.
Okay, very good. And I'm looking forward to see you at the next conference on February 17th. And thanks again for coming on, Ben.
All right. Thanks, Anton. Appreciate it.